Hello traders, welcome to my YouTube channel once again. My name is André Cardoso. Thank you very much for being here. It's always a pleasure for me to share my insights with you. Specifically with those who are learning process, it's always important to understand what we are trading and how to trade the market, and the objective here is to get you synced with those harmonic trading methodologies or those variables that we search for in order to identify those harmonic patterns or advanced pattern formations. So I want to share some of those patterns with you. The objective is not to motivate you to trade those patterns, but to learn how to identify those ratios and those criteria. So let's start with the cable. I just want to share a couple of those charts with you, and what I'm expecting to happen and what I will do if the market decides to approach some of those levels. So the cable 136.39 or 136.40, 168 extension, a fall below the previous structure support position at 137.79 may offer more downside momentum. So we are now threatening that same support level. I assume if the market decides to violate this level, we will find it may find some pressure at the golden Fibonacci, which will complete the bullish crab pattern. So by default, the crab pattern will suggest a retracement or a bounce from this price zone towards the 38% Fibonacci retracement level. So basically, this is a retracement for the pattern itself. So basically we will search for the 38% fee 137.78 as a default target if the price forms the crab pattern. So first of all, we need to wait for the formation of the pattern. Second, we need to observe the market conditions, and as soon as the market approaches those levels, if you have the market entering or exiting or exit oversold conditions, in this case we want to see the market forming kind of a bullish divergence at some point. So let's observe the market conditions when the price approaches that same price zone. But as I said before, we have default targets already projected. If the price decides to form the pattern, we have projections for targets. Very similar with euro versus dollar. Obviously it can change for a little bit, but we will discuss that later if that happens. If the price decides to trade above this previous or the most recent resistance, it may change the structure, and we will search for different criteria at this point, and using the variables that we have and the Fibonacci ratios that we have at our disposal at this point. We have also projected a bullish crab pattern at 117.39, so 117.40. So golden Fibonacci also projected below for euro versus dollar, which may offer some pressure. Now the Australian dollar, Aussie, also actually it's now facing or approaching, let's say it's approaching this trend line support. We can face this as a potential next zone, and the support for the next zone. So basically I will not be surprised to see Aussie finding later. Of course we need to wait for validation of that heads and shoulders, but I will not be surprised based on that heads and shoulders. I will not be surprised to see the Kiwi falling into those levels 72.48, 200% Fibonacci extension. So I will not be surprised to see that happen, but that doesn't invalidate the possibility to form patterns during that process. And against that projected momentum, so for now this is only a projected momentum. We don't know if the price will respect that expectation, but what we have at this point is, as I said before, we are approaching this ascending, we can call this as ascending trend line support for the next zone, but we have also those golden Fibonacci and the 224% Fibonacci extension projected below, so I will not be surprised to see the price finding some support inside that range, or even at the golden Fibonacci right below the previous structure support, 76.21, 76.06. Right below that support level we have the golden Fibonacci forming this bullish shark pattern. As always, the bullish shark pattern will target the 50% Fibonacci retracement level, and that will complete the bearish 5-0 sequence. And I will change the color here into blue just to point that pattern. So the bullish the bullish shark pattern will always, if target achieved, it will always print, in this case, a bearish 5-0 sequence. Okay, so if the price, it's a if-then situation. If the price decides to print the bullish shark pattern, we will expect a bounce from these levels, let's say from an horizontal support and the next zone for the heads and shoulders. We will expect a bounce from these levels, and that will print the bearish 5-0 sequence. So basically we will wait for that pressure, and that pressure may also offer more downside momentum, and eventually towards that same projection for the heads and shoulders. We never know, it's pure speculation here, but who knows. It's a nice opportunity to try to go short if the market prints the shark pattern. First of all, we need to see the shark pattern printed. We need to observe if there's conditions to buy the market, because this is a bullish pattern. We need to wait for a buy opportunity there if the market decides to offer that opportunity. And then at the 50% Fibonacci retracement level, first things first, break even your trade, and if the market decides to fall, you exit your trade with no costs. Of course, partitioning your trade during that process, it's always the suggestion. So as soon as the price achieves your first target, the 50% fib, break even your trade and close a portion of your initial position size. And if the market decides to give sequence to that 5-0 format at the 50% fib, so you will exit your trade, your bullish trade or your longs, and the market will keep sinking or keep falling. So criteria for the Australian dollar versus the Aussie: golden fib right below the next zone, or right below the most recent support, eventual bullish shark pattern, and the bearish sequence, the bearish 5-0 sequence later. Of course, we never know if the price will respect that sequence. We can see the price trading even higher from here, and if that happens, that will change, of course, that will change our projections later. So we need to adjust accordingly to the price action. But basically, what we have at our disposal may suggest some of those behaviors in the next sessions ahead. So the kiwi is already trading inside the bullish shark pattern range, or the bullish shark pattern territory. So at this point, I will not be surprised to see that bounce as soon as the market finds support, since the market has ignored the golden Fibonacci level here. So we just need to wait for the 224% fib. If the market decides to nail that Fibonacci level, it's not necessary. The market can find support between that range. I always like to project my trades between, or specifically at those Fibonacci levels. I will enter the market or at 161 or at 224. I will wait for the market to consolidate inside this range. No, I will wait for one or two options. Okay, I will not enter the market inside these. Let's say I will not wait for the market to fall in the middle of that range to enter the market. Okay, I will decide to enter or at the golden fib, or I will wait for the 224. Of course, if at the time that I will observe, the time that I will at the time that I identify the pattern, if we are already trading inside this range, let's imagine a situation where I see this pattern for the first time right now, and we are already trading this range, I can try to search for a lower time frame, and when I say a lower time frame, I can go into a 10 minutes time frame and try to identify the best opportunity to trade this structure. Let's say, I need to see the price actually confirming a violation of this most recent descending momentum or this descending trend line. If the market decides to break that level and to consolidate at some point, so if the market decides to form kind of a consolidation and a pattern that offers me an opportunity to go long from the middle of those ranges, I can try to do that, but I will not project an entry in the middle between those ranges. So if the price is trading at this point, and if I start to project the pattern below, I will project an entry point at the golden fib initially. I have only two options here. The market will offer me an opportunity to bounce from the golden Fibonacci extension, and I will search for the 50% Fibonacci to be reached as a default target. And if the market fails, I have another option at 224% fib. So of course the risk-reward ratio for those trades are very, very friendly, because you don't need to extend your stops too much. But 224% fib, I will target a situation like this. So I need to choose before the market completes those patterns. I need to choose which one of those I will try to engage. I can try to engage both. If the market fails one, I will try to take the second one. And if I assume the first one as my trade, and if that fails, I will always try a second attempt at 224% fib. But if the market is trading far away from those levels, and if I start to project those patterns, as I said before, I start to project an entry point at the golden fib. So this is my default projections there. So of course the market has ignored the golden Fibonacci level, as you can see here, very strong fall for the kiwi. So we can try to identify the best moment to engage the market from these levels. I need to adjust those targets there. We have default projections for the kiwi at 71.46. So if the market decides to bounce from these levels, we already know the reason why. Another one that I projected before, this one, it was projected at 109.57, 127% Fibonacci level. I'm not sure if the market will achieve those levels. For that to happen, we need to see the kiwi trading a few points lower. So for the Australian dollar versus the kiwi to trade a few points above, we need to see that reversal momentum for the kiwi. So eventually the kiwi, there's always two options. The market will enter into a sideways moving process, not printing new lows, consolidation, pure consolidation, and during that process we may see the Australian dollar trading is just a few more points above, just to fill those criteria for the bearish Gartley pattern. Gartley pattern, why? Golden Fibonacci as resistance, golden Fibonacci as support, 127% as a completion point. Always the same, 127% of this swing. Okay, so we have golden Fibonacci as resistance, golden Fibonacci as support, and between golden fibs there's only one pattern that can emerge. below this previous structure support. Of course, we have patterns, we can project patterns above those levels if the market decides to ignore that Gartley pattern. So, but between golden Fibonacci levels, there's only one option in terms of harmonic patterns. It's a Gartley pattern at 127. And there's a very simple interpretation of this pattern. 6 plus 6 equals 12. So basically we have very friendly variables to search for the Gartley pattern. So golden, again, 618 as resistance, 618 as support, an extension of this very swing low, 127, 109, 57, the completion point, the 127% Fibonacci extension. If the market decides to fail and decides to approach the previous structure highs and to trade above those highs, there's only another one, and that will that one will be printed actually between golden Fibonacci levels, between the retracement levels, between the golden Fibonacci retracement levels and the golden Fibonacci extension level. From this swing, I will start to search as soon as the price starts to trade above resistance. I will start to search for the 168 extension based on those criteria: golden Fibonacci as resistance and support. If the 127% fails, I will search for the golden extension above. So, and this completes my harmonic trading introduction for today. I hope you enjoy some of those variables. Again, my objective here is not to motivate you or to incentivize you to trade the market, but to learn how to identify those patterns. I believe it's the most important thing that we can do as a trader is to know, or at least to have a notion of what we are trading, that allows you to enter the market with confidence, without fear, and without committing all those mistakes, exiting and entering the market without the proper knowledge of the patterns the market is trading, is forming for you. So that being said, I hope you enjoy. Have a nice week ahead, and see you in the next time. Stay well.